Hello everyone. So in the last class we were discussing about this illustration pertaining to accounting equation, right? Remember accounting equation, asset is equals to liability plus capital. The total of asset will always be equivalent to the sum of liabilities and capital. So we understood with the help of this particular illustration number 8 in detail. Any transaction for that matter, you remember this? We solved it, right? So our accounting equation used to always hold good. Look at this. The total of asset, this is your asset, okay, so it was equivalent to sum of your liabilities and capital. So asset is equals to liability plus capital. This is the accounting equation. This will always hold good. Clear? So let's straight away start with the next aspect, that is double entry system. Remember the dual aspect concept what we discussed. So over there I gave you the meaning of this particular term, double entry system. Okay, so when it comes to accounting concept, one of the accounting concept was dual aspect concept. When I say dual, we talk about two, right? Correct? So what are the two aspects of accounting? One would be debit, another would be credit. Okay, and what is this double entry system of accounting? For every debit there will be equal and opposite credit. Okay, for every debit there will be equal and opposite credit. If I am debiting a particular account to the extent of 10,000, simultaneously I'll have to credit another account to the extent of same value, that is 10,000. All these things is already been given in the notes, guys. Okay, so if you just have a look at this particular concept, you look at this. This is the concept what we were talking about, the dual aspect concept. The two aspects of accounting are nothing but debit and credit. Look at the meaning of the term double entry system. For every debit there will be equal and opposite credit. Okay, and then we discussed about accounting equation. So here what we'll be doing is we'll be learning the concept of double entry system, and we'll be learning right from the basics, okay, with respect to passing the journal entry. How exactly are we supposed to pass the journal entry? What exactly are the rules which we need to follow? Everything will be discussed today. Okay, the meaning is simple and clear, right? For every debit there will be equal and opposite credit. Any journal entry you take for that matter, okay, so the total of debit and credit should always be equal. Okay, so just because we follow this double entry system of accounting, our balance sheet is bound to tally. I am debiting one account to the extent of 10,000, simultaneously I am crediting another account to the extent of 10,000. Debit and credit are matching, right? Correct? So my financial statement or my balance sheet should always match. Clear? Okay, so let's look into the theoretical aspect which is being given in your material. Okay, so look at this. So double entry system of bookkeeping is accounting system which recognizes the fact that every transaction has two aspects. You already know what exactly are those two aspects. Look at this, debit and credit. Both aspects of the transactions are recorded in the books of accounts. So whenever we are recording a transaction, it's not that we'll be recording only one aspect and we'll be ignoring the other. So whenever you record for a transaction, okay, so whenever they say recording, they're talking about journal entry. You need to give importance for both the aspects, that is debit as well as credit. Clear? Okay, then they have given the debit has been derived from the Latin word debitum and credit has been derived from the Latin word credere. Okay, so not important from examination perspective, but purely for the knowledge sake, let me just go through these two stuff. So here debit has been derived from the Latin word debitum, which means what is due. Whatever you are supposed to receive, okay, that is what is debit. Okay, so according to this Latin term debitum, debit means whatever is due for you. Now let's say you guys have sold the goods to your customers on credit basis. Don't you think you are supposed to receive the amount from them? So it is due from them. So whatever you are supposed to receive, okay, so that is debit. Clear? So what is credit? Credit is derived from the Latin word credere, which means what is trusted. Okay, so it is abbreviated by credit. Now, what is trusted? What does it mean? If somebody is trusting on you and if they are giving a loan to you, that is credit for you. Clear? So what do you understand by this term? You have taken a credit of 50,000 rupees. It means you have received 50,000 rupees of loan. Okay, you have borrowed 50,000 rupees. Just because somebody has trusted you and given you 50,000 rupees, don't you think it becomes your obligation to repay this? That is your liability, right? Correct? So this is the payable. So in the term debit, what we spoke about, whatever is due, that is receivable for you. Okay, but here what is trusted? Somebody has trusted on you and given you a loan of 50,000 rupees. It is your obligation to repay it. Okay, so it is payable for you. Okay, so that is what is credit. Debit is receivable, credit is payable. As simple as that. Clear? Okay, so double entry system records the transaction by understanding them as debit and credit item. A debit entry is one account, okay, so gives the opposite effect in another account by credit entry. Not relevant. Once we discuss the concept of journal entry, you will be discussing in detail. Okay, so which account has to be debited and why, and which is the account which we need to credit and what exactly is the reason behind it. Okay. Okay, let's talk about the features of double entry system. Every transaction has twofold aspects, that is one party giving the benefit and the other party receiving the benefit. Any transaction you see, benefit for one is as good as burden for the other. Clear? So if at all I'm selling the goods to you guys, okay, so I'll be receiving some benefit. What benefit will I be receiving? I'll be receiving the cash from you guys. Okay, so you will have to pay that cash. So benefit for one person would be payable or burden for the other person. As simple as that. That's the statement what they are trying to convey over here. Every transaction has got twofold aspect. One party gives the benefit, other party receives the benefit. When I am selling the goods, I am giving this particular goods to you. Okay, you are the one who are receiving. Clear? Look at the next feature. Every transaction is divided into two aspects, okay, which is nothing but debit and credit. One account has to be debited, another account has to be credited. Now, any transaction for that matter, it will be having two aspects. Any journal entry for that matter. Whenever I am recording a transaction, I will have to record both the aspects, right? The debit aspect as well as credit aspect. So, over here what is relevant and important is you should be able to identify which is the account which has to be debited and which is the account which has to be credited. If you possess so much of knowledge, more than sufficient. Clear? Every debit must have its corresponding and equal credit. The same thing what we have written. For every debit, there will be equal and opposite credit. If I am debiting an account to the extent of 10,000, simultaneously I will have to credit another account to the extent of equivalent value. It should not be that you are debiting an account to the extent of 10,000 and crediting another account to the extent of 12,000. No. For every debit, there should be equal and opposite credit. Simple? Okay, now let us understand the next thing, that is the concept of account. Now, whenever I need to debit and credit, what am I going to debit and credit? Some account, right? Okay, so you need to be able to identify which is the account which has to be debited and which is the account which has to be credited. Okay, for that we have got golden rules of accounting. Certain rules what we need to follow, normally we will be calling it as golden rules of accounting or traditional approach. Okay, so over here we will be learning the classification of different accounts and the rules pertaining to these accounts. Okay, let's straight away look into this. Okay, this is important. Based on this only we'll be passing the journal entry. Okay, so pay complete attention and understand this concept. Okay, so these are the golden rules of accounting. Okay, so based on this only we'll be identifying whether an account should be debited or credited. First, let us understand the classification based on this golden rules. Okay, so according to these golden rules, any account for that matter can be classified into three types. Okay, so any account for that matter can be classified into three types. So what are those? One would be personal account, real account, and nominal account. Clear? So these are the broad classification. According to this golden rules, any account for that matter, it can be classified as personal, real, and nominal. Now let us understand the meaning of these three types of account. When is that you will be considering an account as personal? When is that you will be considering an account as real? And when exactly are you supposed to consider an account as nominal? Now what is the nature of this account, personal account? When I say personal account, we are talking about people, right? Correct? So somebody's account for that matter. When I'm talking about personal account, we are talking about somebody's account. Now this personal account, it can be either natural person, artificial person, or representative personal account. So this can be further subdivided into three categories: natural person, artificial person, and representative person. Okay, so let's talk about this. Okay, so this can be further classified as natural person, artificial person, and finally we have got representative person. Clear? Okay, let us understand who exactly is natural person, who exactly is artificial person, and when exactly will we be considering somebody as a representative person. Okay, so first thing is natural person. Natural person is nothing but people like you and me who have got life. Clear? So who are natural person? People who have got life basically. Okay, so Ramesh account, Suresh account, Mahesh account, okay, anybody for that matter who has got life will be considered as natural person. Okay, so who is natural person? In simple terms, any person who has got life, okay, will be treated as natural person. So example for this would be Mr. A's account, Ram's account, anybody for that matter who has got life. Correct? So any person who has got life basically will be treated as natural person. Now what about this artificial person? This will mainly be including what? All your business entities. Okay, so this will mainly be including your business entities. Clear? So all the business entity, what is the meaning of the term company? Company is an artificial person created by law, right? Correct? So do they have life? No, they don't have life. So all your business entities will be considered as what? They'll be considered as artificial person. Okay, so example for this would be ABC Limited, XYZ and Co. All your business entities, they'll be treated as artificial person. Clear? Now, representative personal account. Now, when I say representative, obviously it should be representing somebody, right? Correct? Or it should be representing some group. Now, example for this would be outstanding expenses. Any outstanding expenses or prepaid expenses. This would be treated as what? This would be treated as your representative person. Okay, so or debtors, creditors. Look at this carefully. When I say outstanding expenses, okay, let's take an example of outstanding salary. What is outstanding salary? I've incurred the salary expenses, but I haven't paid it yet. Correct? So in my organization, there are, let's say, 500 employees working for me. Clear? So we have got 500 employees working for me. Now I haven't paid the salary to these people. Okay, I have incurred the salary expenses. Let's say salary of this month will be paid on 5th of subsequent month. So till 5th it would be considered as outstanding. Okay, so I'll be recording the salary expenses in the current month itself. Why? Because it is the expenses relating to current month. Let's say June. So June month salary will be recorded in the month of June itself. The reason is accrual concept. Remember, record the transaction as and when the transaction takes place, irrespective of the fact whether money has been paid or not, or whether money has been received or not. Although I haven't paid this particular salary yet, the payable entry or the due entry I'll be passing in the month of June itself. It will be paid on 5th of July. Okay, so till 5th it would be considered as what? It would be considered as outstanding. Clear? Now this outstanding salary will be representing what? It will be representing all these 500 employees account. Clear? So this particular term, when I say representative personal account, obviously it should be representing some group, right? So when I say outstanding salary, what does it represent? It will be representing the group of employees to whom salary is yet to be paid. Clear? So same way when I say debtors, who are these debtors? These are nothing but the customers, okay, to whom I have sold the goods on credit basis. Who are creditors? These are nothing but the vendors or suppliers who have supplied the goods to me. I'll be having n number of customers. Let's say I've got like 40 customers. Now all these 40 customers collectively put together will be calling it as debtors. It represents a group basically. Hope you all understood this. Clear about natural person, artificial person and representative person? Any doubt, any confusion so far? Hope this is clear. Okay, so clear about personal account. Now let's talk about the rule of this personal account. Okay, after that we'll just move on to this real account. Let's talk about the rule of personal account. Now this is what is relevant. So you will have to understand what exactly are the rules. Okay, so let's talk about the rule of personal account. Don't worry, all these things we'll be writing again in our notes. Okay, all these concepts, whatever we are discussing over here, will be written on available in the notes for you guys. Okay, just pay attention. That is more than sufficient. You need not prepare any notes. Everything will be provided to you. Okay, let's have a look at this rule. The rule of this personal account will be what? Debit the receiver, credit the giver. Okay, so this would be the rule. Debit the receiver, credit the giver. Now, debit the receiver of what and credit the giver of what? Here, if you guys just go back to this thing, look at this. What did they mention? They clearly mentioned that one party will be giving the benefit. Okay, one party will be receiving the benefit. Clear? So, if you want the complete rule, it would be like this. Debit the receiver of benefit, credit the giver of benefit. Okay, debit the receiver of benefit, credit the giver of benefit. So normally we'll be calling it as debit the receiver, credit the giver, but the complete rule would be like this: debit the receiver of benefit, credit the giver of benefit. Easy? Clear about this? Whenever a particular person is receiving any benefit, will be debiting his account. Whenever a person is giving any benefit, will be crediting his account. As simple as that. Hope you guys understood this. Clear? So that's all. With respect to personal account, if you remember, this much more than sufficient. Okay, so let's talk about this real account now. So what is this real account? Yes, so here when it comes to real account, we'll be talking mainly about the asset side of the balance sheet. Okay, so when I say real account, we are mainly talking about what? We are talking about the assets. Just remember that when we say real account, we are mainly talking about assets. But important point to remember is all the assets are not classified under real account. Majority of the assets would be considered as real account, but not all the assets. For example, look at this debtors. Don't you think debtors is our asset? Correct? So prepaid expenses. Don't you think prepaid expenses are also our asset? But where do we classify? We don't classify or we don't consider it as real account. Rather, we'll be considering it as what? Personal account. Okay, so bank account for that matter, always remember bank account, although it is my money which is lying with the bank, okay, it is not considered as real account. It is personal account. Why is it personal account? Don't you think it would be somebody's bank account? If you are maintaining a savings bank account in, let's say, SBI, it is your bank account. Okay, so Mr. So and so's bank account. If business entity is maintaining a bank account, okay, it would be XYZ Limited's bank account. It is somebody's bank account. So it is personal account. Don't get confused. Although it is an asset, it is not classified as real account. Okay, it is classified as personal account. Majority of the asset would fall under the category of real account, but not all assets. Okay, so when I say majority of the asset, let's say 90% of the assets would fall under the category of real account, but not all the assets. Clear? So example for this, you guys can say it as, let's say, plant and machinery, land and building, furniture, cash, all these things, okay, would be treated as what? Would be treated as asset and will be ultimately treated as real account. Clear? Any doubt, any confusion pertaining to real account? Just remember these two statements. Real account mainly focuses on the asset side of your balance sheet. But all the assets are not classified as real account. Majority of the assets are classified as real account, but not all the assets. Okay, and let's talk about the rule relating to this. The rule of real account would be like this: debit what comes in, credit what goes out. This would be the rule. Debit what comes into the business organization and credit what goes out of the business organization. Okay, so this would be the rule of real account. Simple. Rule of personal account, debit the receiver of benefit, credit the giver of benefit. The rule of real account would be debit what comes in, credit what goes out. Okay. And finally, we have got nominal account. Okay. So let's talk about this nominal account. When it comes to nominal account, this focuses mainly on your P&L account. Okay. So when it comes to nominal account, this would be focusing mainly on your P&L account. Okay, so this would be focusing mainly on your P&L account. When I say P&L account, what things comes to your mind? What will be the component of P&L account? Don't you think P&L account will be comprising the information relating to your expenses, okay, and income, right? So this talks about mainly your expenses or losses and then incomes or gain. Clear? So this talks mainly about your P&L account. P&L account comprises the information relating to your expenses and losses and income and gain. So nominal account talks about the same. Example can be anything: salary paid, rent paid, commission received, interest received, commission paid, interest paid, printing and stationery expenses, okay, bad debts, anything for that matter. All your expenses and income will be categorized under this nominal account. Clear? All your P&L account item will be considered as nominal account. Is this clear? Now let's talk about the rule. Okay, so before rule, if you want, I'll just write the example. Salary, rent, okay, so printing and stationery, interest received, discount received, discount allowed, commission received, anything for that matter. Okay, so bad debts, all these things would be example of the nominal account. Now when it comes to rule, it is very simple. On the debit side of P&L account, normally what do we show? Do we show the income or expenses? Debit side of P&L account. On the debit side, don't you think we'll be showing all the expenses and losses, and on the credit side will be representing all the income and gain? The rule is very simple. The rule goes like this: debit all expenses or losses, credit all income or gain. Clear? So debit all expenses and losses, credit all income and gain. This would be the rule of nominal account. Clear? So these rules is what is very important or crucial. Based on these rules only we'll be passing the journal entry. Is this clear? I hope you all understood this. Clear about what is personal account, what is real account, and what is nominal account? Okay, so this would be the chart for you guys. Anybody having any doubt, any confusion? Simple? Okay. Now let us take few examples, okay, and based on those examples we'll be learning how exactly are we supposed to apply these golden rules. Okay, so before that, let me just write the golden rules for you guys. Okay, so golden rules of accounting, this is also called as what? This is also called as the traditional approach of passing the journal entry. So according to this, okay, so according to this golden rules, any account for that matter, it can be classified into three types. Okay, so what are those? Personal account, real account, and then nominal account. Clear? So any account for that matter, it can be classified into personal, real, and nominal. So what are personal account? So personal account are nothing but those people's account. Okay, it can be either natural person, artificial person, or representative person. Okay, so here this can be further classified into natural, personal. Okay, so natural person would be mainly people like you and me who have got life. Okay, so Ram's account, Ashok account, any person for that matter. Clear? And then the second thing would be artificial person account or artificial person. Artificial person will mainly be including what? the business entities. Okay, so this will mainly be including the business entity. So this can be ABC Limited, XYZ and Co. All your business entities will be classified as artificial personal account, and finally we have got representative personal account. All your outstanding expenses and prepaid expenses will be categorized like this. Okay, so all your outstanding expenses, prepaid expenses, debtors, creditors, etc. Clear? Clear about personal account? And what would be the rule of this personal account? The rule of personal account would be like this. Debit the receiver of benefit and credit the giver of benefit. Okay, so debit the receiver and credit the giver is what we call. So complete rule will be debit the receiver of benefit and credit the giver of benefit. This would be the rule. Simple. If you remember this much, more than sufficient. Okay. Now, when it comes to real account, okay, so this will mainly be focusing on the asset side of balance sheet. Okay, so asset side of so it focuses mainly on the asset side of balance sheet. Always remember, majority of the asset would be classified as real account, but not all the assets. Okay, try to remember this point. I'll just write the note over here. Majority of assets will be classified as real account, but not all the assets. Okay, you will have to remember this particular point. Majority of the assets will be classified as real account, but not all the assets. There might be few assets like this. Prepaid expenses, okay, so debtors for that matter, although these are the assets, these are not classified as real account. Okay, bank account for that matter, although it is an asset, it is not classified as real account, it is personal account. Simple. Hope you guys understood this. Clear? Try to remember this point, very important. So just because it is an asset, it is not necessary that it should be real account. Okay, there are few assets like bank account, prepaid expenses, debtors, bills receivable. Although these are assets, they are not considered as real account, they are considered as personal account. Okay, so example for this would be plant and machinery, furniture, building, vehicle, cash, etc. All these things would be example of real account. Okay, so when it comes to rule, okay, so let's talk about the rule. The rule would be like this: debit what comes in and credit what goes out. So anything coming into the business will be treated as debit, anything going out of the business will be treated as credit, as simple as that. Is this clear? Okay, now let's move on to the next account, that is nominal account. Okay, so nominal account mainly focuses on what? It focuses on your P&L account. When I say P&L account, this will be comprising of all your expenses or losses and then all your income and gains. So example for this, you already know. Okay, so it can be either the salary, rent, office maintenance or office expenses. Okay, so printing and stationery, bad debts, interest received, commission received, etc. Okay, so these would be the example of this nominal account. And when it comes to rule, okay, so again the rule would be very simple: debit all expenses and losses, credit all income and gain. Okay, so debit all expenses or losses. In the P&L account, normally the expenses and losses we show it on the debit side, right? Same logic, nothing else. Okay, so debit all expenses or losses, credit all income and gain. So if you remember these rules, okay, based on these rules only we'll be passing the journal entries. Now let us understand the practical applicability of these rules. How exactly are we going to apply these rules? Okay, let's just look into it. So all the transactions will be covered over here. Okay, so probably over here I'll be discussing close to like 20-25 transactions. Majority of the transactions we'll be discussing straight away over here, and after that straight away, okay, if you want you guys can just solve the illustrations. Okay, so let's just start up with each and every transaction. So any business for that matter, the very first transaction will be what? The owner will be bringing in some cash, right? Correct? So he'll be contributing some amount as capital. Okay, so he'll be contributing his share of capital. Now let us understand how exactly do we pass the journal entry for this transaction. So we'll be discussing quite a lot of transactions over here. So right from the basics I'll be teaching you guys how to apply these particular rules. Okay, so pay complete attention and understand these things. Okay, so let's look into this. Okay, let us say Mr. A started business with 5 lakh rupees. So he is bringing in 5 lakh rupees towards the business. First thing is understand the transaction carefully. Understand the meaning of this particular transaction. What is happening? Mr. A, okay, he is contributing 5 lakh rupees towards the business. Don't you think he'll become the owner? Correct? So Mr. A is the owner in this case. The amount whatever he is contributing, what do we call it as? Owner's contribution towards the business will be called as what? It would be called as capital. Okay. Now any transaction you need to first identify what are the account which will get affected because of this transaction. So here if you see he is bringing in 5 lakh rupees. Okay. So what are the account which will get impacted over here? Because of this transaction there are two accounts which will get affected. What are those? Yes, which are the two accounts which will get affected over here? Here the two accounts which will get affected would be, one is cash account. Okay, he is bringing in 5 lakh rupees of cash. Another thing would be Mr. A's account. Okay, so these are the two accounts which will get affected, cash account and Mr. A's account. First thing is whenever a transaction take place, you should be able to classify which and all are the accounts which are getting affected because of this transaction. So in this case, the two accounts which are getting affected are what? One is cash account, another thing is Mr. A's account. Okay. Now you need to classify whether these accounts are personal, real or nominal. Okay. So you should be able to identify whether these accounts are personal, real or nominal. So what do you think? Cash account, is it personal, real or nominal? It is an asset, right? Correct. So this would be treated as real account. And what about this Mr. A's account? Look at this, Mr. A's account, he is somebody, right? Correct, he has got the life. So this person would be treated as personal account. So once you guys are done with this, all you need to do is just apply the respective rules. Okay, so cash account, it is a real account, and what is the rule of real account? You guys can refer this, look at this, debit what comes in, credit what goes out. This is what is the rule of real account. Okay, and whenever you guys are recording a transaction or whenever you guys are passing a journal entry, make sure that you guys look from the perspective of the business and not from the point of view of the owner. Always look from the perspective of the business, because you will be recording these transactions in the books of business. Remember business entity concept, what did we learn over there? Business is separate from owner. Okay, so when you're passing the journal entry, you should not look from the perspective of the owner, rather you need to look from the perspective of the business. Clear? Okay, so for the business, what do you think this cash? Is it coming in or is it going out? When Mr. A is literally giving 5 lakh rupees towards the business, he is contributing 5 lakh rupees towards business. When you look from the point of view of the business, is the cash coming in or is it going out? Yes, the cash is coming in, right? So according to the rule, whatever comes into the business, what are we supposed to do? We just need to debit it. Okay, so debit what comes in, credit what goes out. So this cash is coming into the business, therefore we'll be debiting it. And what about the rule of personal account? Debit the receiver of benefit, credit the giver of benefit. So this person, Mr. A, is he receiving the benefit or is he giving the benefit in this case? Is he receiving 5 lakh or is he giving 5 lakh? Don't you think he is giving this benefit of 5 lakh? Therefore, we just need to credit his account. He is the giver over here. Okay, so we need to credit it. So the journal entry would be what? The journal entry would be like this. Cash account debit 5 lakh to Mr. A's account 5 lakh. So this is how the journal entry will be passed. Is this clear? Hope you guys understood this. Okay. So just below the journal entry, we'll be writing something called as narration. What is narration? It is nothing but a brief explanation for this particular transaction. So here I'll just write being cash contributed by owner. Okay, so this explanation, the brief explanation is what is called as narration. If I don't know the transaction, if I just have a look at the journal entry and if I don't know for what exactly is the transaction for which this journal entry was passed, I'll just have a look at the narration. By just reading this narration, I'll get to know what exactly was the transaction for which this journal entry was passed. Okay, so narration is as good as a brief explanation for the transaction. See, normally the journal book would appear like this. Okay, so the format of the journal would be like this. Look at this, it will be having few columns like this. Okay, so date, particulars, ledger folio, debit amount and credit amount. This would be the format. Okay, so the journal book would look like this: date, particulars, ledger folio, debit amount and credit amount. This is how the journal book would look like. So in the date, obviously you will be writing the date of the transaction in a chronological order, that is in a sequential wise, date wise. Okay, the transaction would appear over here, the main journal entry would appear over here, and below the journal entry we will be writing the narration. Clear? So below the journal entry we will be writing the narration, and here whatever is the amount, okay, so that will be written over here. The debit amount and credit amount should match. Okay, that is what is double entry system. Now what is this ledger folio? It is just as good as a reference number. Okay, so after recording the transaction, what would be the next step? Remember the accounting cycle. What would be the next step? First we pass the journal entry. After journal entry we do something called as ledger posting. From the ledger posting we will be preparing the trial balance, and finally from the trial balance we will be preparing the financial statement. This is accounting cycle, right? So after passing this particular journal entry we need to do the ledger posting, right? Correct? So all these journal entries will be posted into the respective ledger. Now here if I pass a journal entry like this: cash account debit to A's capital account 5 lakh, 5 lakh. In this particular ledger folio, if I just mention 1, it means this particular transaction of 5 lakh is appearing on the first page of the ledger. Okay, on the very first page of ledger you guys will be able to see this 5 lakh. So ledger folio is nothing but as good as a kind of reference number which is given. So if I want to search this particular 5 lakh rupees in the cash ledger, I'll have to just look into the first page. If I just mention 10 over here, so this 5 lakh rupees will be appearing on the 10th page of the cash ledger. Simple. Hope everybody understood this. Okay, so clear about the meaning of the term narration and all. Okay, so this is your first transaction. Okay, so this would be the journal entry. Let's take another transaction. Let's see, Mr. A started the business with 5 lakh rupees of cash and 2 lakh of furniture. Now look at this. Mr. A, along with bringing in 5 lakh rupees of cash, he is also contributing, or he is also bringing this furniture towards the business. He is giving furniture worth rupees 2 lakh to the business. So let us understand what exactly would be the journal entry for this. So before arriving at the journal entry, what would be the first step? First step would be understand the transaction and check out what exactly are the ledger which will get affected because of this transaction. So what and all account will get affected because of this transaction? As usual, he is bringing in cash of 5 lakh rupees. So here the account which will get affected would be, one would be cash account. Okay. So another would be furniture account. And then Mr. A's capital account. Okay, so the account which will get affected would be what? It would be cash account, furniture account and A's capital account. So how much cash is he bringing in? He is bringing in 5 lakh rupees of cash, 2 lakh rupees of furniture. So total amount or total value which is contributed by the owner will just be 7 lakh rupees. Okay, so will be 7 lakh rupees. So not only this 5 lakh rupees of cash, but also this 2 lakh worth of furniture also will be considered as a component of his capital. Okay, so total capital contributed by Mr. A would be how much? It would be 7 lakh rupees. Now we just need to classify these accounts whether they are personal, real or nominal. Okay, so let's classify these accounts whether they are personal, real or nominal. So what about cash account? Is it personal, real or nominal? Yes. So cash, it is a real account. What about furniture? Don't you think furniture is also an asset? So even this would be considered as real account. And A's capital, as usual, you guys know that this is personal account. Is this point clear? Anybody having any doubt, any confusion so far? Clear, right? Now we just need to apply the rule of personal account, real account and nominal account. Okay. So what's the rule of real account? Debit what comes in, credit what goes out. Always look from the perspective of the business or from the point of view of the business. So for the business, don't you think this cash and furniture is coming in? Correct? So therefore we'll be debiting this. Okay. So debit the cash of 5 lakh and debit this furniture of 2 lakh rupees. And the rule of personal account. What is the rule of personal account? Debit the receiver of benefit, credit the giver of benefit. So this person, Mr. A, is he receiving the benefit or is he giving the benefit? Don't you think he is the giver? So credit the giver of benefit. Okay, so we'll just be crediting this A's account to the extent of 7 lakh. So what would be the journal entry? The journal entry would be like this. Cash account debit 5 lakh. Furniture account debit 2 lakh. To what? To A's capital account. So total capital of A is how much? 7 lakh. To A's capital account, or you can say it as Mr. A's capital account. $7 lakh. Okay, so this is how the journal entry will be passed. Clear? Now, what do we call this type of journal entry? Look at this. Here we have got more than one debit, right? Correct? So earlier if you see we had only one debit, one credit. Okay, but here we have got more than one debit. Okay, so we have got more than one debit and one credit. So those type of journal entry wherein you will come across either more than one debit or more than one credit, you will be calling it as what? You will be calling it as compound entries. Okay, so what are these? So it refers to those entries which comprises of either more than one debit or more than one credit. Okay, so those journal entries which will comprise of more than one debit or more than one credit will be called as what? They will be called as compound entries. So this entry, it is a compound entry. Why? Because we have got two accounts which are debited. Okay, so cash as well as furniture. We have got two accounts which is debited. Therefore, this will be called as what? It will be called as compound entry. Is this clear? Hope everybody understood the meaning of this term. Okay, so compound entry. Whenever you come across either more than one debit or more than one credit in the journal entry, it would be called as what? It would be called as compound entry. Simple. Okay, so let's move on to the third transaction. Let's say purchase of goods rupees 50,000. Okay, let's talk about this particular transaction. I have purchased the goods to the extent of 50,000. What will be the account which will get affected because of this transaction? One would be your purchases account, another thing would be your cash account. These are the two accounts which will get affected. Okay, so one is purchases account, another thing is cash account. Okay, so purchases and cash, these are the two accounts which will get affected. Now purchases, okay, what type of account is it? Is it personal, real or nominal? Yes. Purchases, what type of account it is? So don't you think this would be nominal account? Correct, it is a nominal account, right? So the money whatever you spend on purchase of goods, okay, it is an expense for you. Okay, so therefore it would be nominal account. And what about cash? This would be real account. Now let us just apply the rule of these particular account and understand whether these accounts should be debited or credited. So the rule of nominal account says debit all expenses and losses, credit all income and gain. So this purchases, it is an expense for me, therefore I just need to debit it. And what about the rule of real account? Debit what comes in, credit what goes out. Now when I purchase these goods, don't you think I'll be paying the cash? When I'm paying the cash, don't you think the cash is going out of the business? Now what am I supposed to do if the cash is going out? I just need to credit it. Okay, so credit what goes out. So what will be your journal entry? Your journal entry would be like this. Purchases account debit 50,000 to cash account 50,000. This will be your journal entry. Okay, so purchase account debit to cash account. Simple. Anybody having any doubt, any confusion so far? Simple, right? Okay, let's talk about the next transaction. Let's say goods sold. Okay, so 60,000. Let us understand what exactly will be the journal entry for this. Okay, so the two accounts which will get affected because of this transaction would be, one would be sales account, another thing would be cash account. These are the two accounts which will get affected, sales as well as cash. Now sales, is it your expense or income? It is your income, right? So whenever you are purchasing the goods, you are spending the amount, it is an expense. But whenever you are selling the goods, you will be receiving the cash. Okay, that is your income. So whether it is expense or income, both will be classified as nominal account. So even the sales for that matter will be classified as nominal account. And what about cash? Is it personal, real or nominal? It is an asset, therefore this would be classified as real account. Any doubt so far? Hope things are clear to you guys. Okay. Now let's just apply the respective rule. What is the rule of nominal account? Debit all expenses and losses, credit all income and gain. So this sales, is it my expense or income? Don't you think it is my income? Therefore we just need to credit this. Okay, and what about this cash? What about this cash? Cash is a real account and the rule of real account goes like this. Debit what comes in, credit what goes out. When I'm selling the goods, don't you think the cash is coming into the business? Therefore, should I be debiting it or should I be crediting it? I just need to debit it. Okay, so this would be the rule. Okay, so I need to debit the cash and I need to credit the sales. Okay, so the entry would be like this. Cash account debit 60,000 to sales account 60,000. So this is how your journal entry would look like. Okay, so cash account debit to sales account 60,000, 60,000. This is how the journal entry would look like. Hope you all understood this. Is this clear? Any doubt so far? Clear about these four transactions? Now, this will be calling it as cash purchases. This will be calling it as cash sales. I purchase the goods, I immediately settle the amount. That is cash purchases. Okay, same way, I sell the goods, immediately I receive the cash. That is cash sales. Now, there will be few transactions which will happen on credit basis. Okay, so wherein I would be selling the goods, but I would not be receiving the cash immediately. I'll be giving some credit period of time to my customers to settle the amount. Okay, so in that case, let us understand what exactly will be the accounting treatment. Okay, so let's talk about the credit purchases and credit sales. Goods purchased rupees 50,000 from Manoj. So I am purchasing goods worth rupees 50,000 from Manoj. Let us understand what exactly will be the account which will get affected because of this transaction. Look at this. I am purchasing the goods. Am I paying the cash immediately? No. So cash is nowhere involved in this transaction. Don't get confused. Just because I am mentioning the value as 50,000, it doesn't mean that 50,000 rupees was paid. No. I am just purchasing the goods from Manoj. Okay, the value of the goods which I am purchasing is 50,000. This is credit purchases. So the account which will get affected over here are, one is Manoj account, another thing would be purchase account. The same thing guys as usual. Okay, look at this here. Instead of purchase and cash, we have got purchase and the creditor who is Manoj. So the two accounts would be purchases and Manoj account. So purchases, you guys already know this is nominal account. And what about Manoj? He's a person, right? Okay, so this would be personal account. Manoj would be personal account. Now let's apply the respective rule. Okay, so what is the rule of nominal account? The rule of nominal account would be like this: debit all expenses and losses, credit all income and gain. So this purchases is an expense for me, therefore I'll be debiting. So what is the rule of personal account? Debit the receiver of benefit, credit the giver of benefit. So this person, Mr. Manoj, is he receiving the benefit or is he giving the benefit? At this point, if you see, okay, when he is supplying the goods to us, is he receiving the benefit or is he giving the benefit? He is the giver of benefit. Okay, what benefit is he giving? He is giving us goods worth rupees 50,000 and he is also giving us some time to settle the amount. So he is the giver of benefit over here. Okay, so therefore, according to the rule of personal account, debit the receiver, credit the giver. Just because he is the giver of benefit, I'll be crediting his account. The journal entry would be like this: purchases account debit 50,000 to Manoj account. So if at all it was cash purchases, I would have credited the cash account. Here, instead of crediting the cash, I'll be crediting this Manoj's account. Okay, purchase account debit to Manoj's account. Simple. I hope everybody understood this. Anybody having any doubt, any confusion so far? Clear, right? Simple entry, right? Clear? So earlier the entry was like this: purchase account debit to cash. So here purchase account debit to Manoj. So who is this person Manoj? Is he my debtor or creditor? He will be my creditor. Okay. So the person from whom we purchase the goods, okay, will be our creditor. He is the supplier. The people to whom we actually sell the goods, these people are my customers from whom I am supposed to collect or receive the amount. So customers are our debtors, whereas suppliers would be treated as our creditor. Simple. Okay, so after this, what will happen? So he would have given me some credit period of time, right? So let's say 2 months of time. After 2 months, don't you think I'll be settling the amount to him? So the next transaction, let's say when cash paid to Manoj, rupees 50,000. So 50,000 of cash I'm paying to Manoj. So what would be the entry in this case? Yes, what are the two accounts which will get affected? Here, don't you think cash is involved? So here the two accounts which will get affected would be, one would be Manoj's account, another thing would be cash account. Manoj account, you guys already know this is personal account. Okay, so it is personal in nature. And what about cash? This would be real in nature. All you need to do now is just apply the respective rules. So what is the rule of personal account? Debit the receiver of benefit, credit the giver of benefit. Now when I am giving this 50,000 rupees to Manoj, is he receiving the benefit or is he giving the benefit? Don't you think Manoj will be receiving this benefit of 50,000? So we just need to debit his account, debit the receiver. Okay. And what about cash? When you look from the perspective of the business, is the cash coming into the business or is it going out? It would be going out, right? So we just need to credit this. Credit what goes out. Okay. So what will be the journal entry? The journal entry would be like this: Manoj's account debit 50,000 to cash account 50,000. This would be the journal entry. Clear? Is this clear? Simple guys, the cash is going out, that's the reason I am crediting. Manoj, who is a personal account, debit the receiver of benefit. Earlier he was the giver, therefore we had credited. Now he is receiving the benefit. If you compare these two accounts, look at these two accounts. Okay, so understand this carefully. Manoj over here, earlier we had credited his account, okay, and Manoj over here, we are debiting his account. Don't you think these two will get nullified? A debit of 50,000 and credit of 50,000 will get nullified. What would be the ultimate entry? Don't you think it would be purchase account debit to cash? Don't you think it's exactly the same entry what we had passed earlier? Look at this. Purchase account debit to cash account. It's exactly the same entry. So this intermediary account, that is Manoj's account, this will get nullified. I hope you all understood this. Clear? Okay. Suppose, okay, so let's say cash paid 48,000 towards the final settlement of 50,000 to Manoj. Okay, so I was supposed to pay 50,000 rupees to Manoj as a full and final settlement. I am settling how much? I am settling 48,000. So let us understand what exactly will be the effect of this transaction. So here, can you identify and tell me whether are we receiving the discount or are we allowing the discount? Yes, I was supposed to pay 50,000 rupees. I am paying only 48,000 rupees as full and final settlement. Am I receiving the discount of 2,000 or am I allowing the discount of 2,000? Don't you think we are receiving the discount? See, whenever you settle the amount, you purchase the goods, you go to a particular mall and you pick up a particular product which has got discount of 2,000 rupees. Do you guys allow the discount to the mall or are you guys receiving as a customer? Customer always receives the discount. Okay, so the seller always allows the discount. So in this case, you had purchased the goods. So you are the customer over here. Okay, so at the time of settlement, the discount of 2,000 rupees in this case is nothing but the discount which you are receiving. Okay, so here the account which will get affected would be what? So one would be Manoj's account. Cash account and discount received account. To Manoj, we were supposed to pay 50,000 rupees. The cash which we actually pay is 48,000 and the discount which we receive is 2,000. This is what is the transaction all about. Okay, so this is what is happening. Now we just need to classify. Okay, so Manoj, we already know this is personal account. Cash, we know that it is real account. And what about discount received? This is nominal account. Discount received is income for us. The place wherein I was supposed to settle 50,000, I am settling only 48,000. It means this 2,000 rupees will be gain or income for us. Okay. So let us just apply the respective rule and arrive at the journal entry. So what would be the rule of personal account? Debit the receiver of benefit, credit the giver of benefit. So in this case, Manoj is receiving the benefit, therefore will be debiting his account. So what is the rule of real account? Debit what comes in, credit what goes out. Is the cash coming into the business or is it going out? When I am settling it, the cash is obviously going out, therefore we need to credit it. So let's talk about the rule of nominal. Okay, so debit all expenses and losses, credit all income and gain. So this discount which I am receiving, it is not an expense for us, rather it is an income for us, therefore will be crediting. Okay, so the journal entry would be like this. Manoj's account debit 50,000 to cash account. How much cash am I paying? I am paying a cash of 48,000. To discount account, or you can call it as discount received account. Anything is fine. To discount or discount received account 2,000. So what type of entry is this? We have got more than one credit. Okay, so Manoj account is debited and two accounts are credited. Okay, cash and discount. Okay, so what type of account is this? This would be treated as compound entry. Okay, so those journal entry wherein you come across either more than one debit or more than one credit will be treated as what? It would be treated as compound entry. But if you just look out the total of debit and credit, debit total it is 50,000, credit total if you see it is 48 plus 2, 50,000 again. Simple. Any doubt, any confusion so far? Hope you guys understood. Clear about the journal entry pertaining to the initial amount which was contributed by the owner along with cash if is contributing some asset. What exactly will be the journal entry? purchases, sales, that is cash purchases, cash sales, and now we understood the journal entry pertaining to credit purchases and settlement of the amount after the due date. Clear? Now same way, let's talk about the journal entry pertaining to credit sales now. Okay, so let's look into this. Okay, let's say goods sold to Ashok rupees 60,000. Okay, let us understand how exactly do we pass the journal entry for this. So this is credit sales. Whenever they mention the name of the party, it would be as good as credit transaction. I am selling the goods to Ashok. The value of the goods is 60,000. So what would be the account which will get affected because of this transaction? One would be Ashok's account. Another would be my sales account. So sales is my income, so you know that this is nominal account, and Ashok, he is a person, therefore this would be personal account. Now you just need to apply the respective rules. Okay, so what would be the rule of this personal account? Debit the receiver of benefit, credit the giver of benefit. Now when I am selling the goods to this particular person, Mr. Ashok, is he receiving the benefit or is he giving the benefit? Think and tell me whether he is a receiver of the benefit or is he giver of benefit. Don't you think he is receiving the benefit? What benefit is he receiving? Benefit number 1, he is receiving the goods worth rupees 60,000. Benefit number 2, he is also receiving this credit period. He need not settle the amount immediately, right? Will he be settling the amount immediately? No. He is getting some time period to settle the amount. Okay, so he is the receiver. So we just need to debit his account, debit the receiver. Okay, now sales is my income. According to the rule of nominal, debit all expenses and losses, credit all income and gains. So sales being my income will just be crediting. Look at the journal entry. The journal entry would be like this. Ashok's account debit, $60,000 to sales account. Clear? Ashok account debit to sales account 60,000. Now this person Ashok, is he my debtor or is he my creditor? So this person will be treated as my debtor. Okay, so basically debtors are nothing but the customers to whom will be selling the goods on credit basis. So Ashok will be our debtor. Okay, so now let us say cash received from Ashok rupees 60,000. So once the credit period is over, what do we do? Don't you think we'll be collecting the cash from our customer? So what are the two accounts which will get affected? So one would be cash account, another thing would be Ashok account over here. So cash, as you guys already know, this is real account in nature. What about Ashok's account? This would be personal account in nature. Okay, so cash is real account and Ashok would be the personal account. Now the rule of real account states what? Debit what comes in, credit what goes out. When I am receiving the cash from Ashok, is the cash coming into the business or is it going out? Don't you think the cash is coming into the business? Therefore, we just need to debit it. Okay. So, what about the rule of personal account? Debit the receiver of benefit, credit the giver of benefit. So, in this case, don't you think Ashok is giving us 60,000 rupees? He is the giver. Therefore, we just need to credit his account. So, look at the journal entry. The journal entry would be like this. Cash account debit 60,000. To what? To Ashok's account. Yes. So cash account debit to Ashok's account. This would be the journal entry. I'm receiving the cash. Debit what comes in. Cash is coming into the business. Therefore, I'm debiting this cash. Credit the giver of benefit. Ashok over here is giving this 50,000 rupees. Therefore, we are crediting his account. Is this clear? Yes. Okay. Let's have a look at the next transaction. Cash received from Ashok 57,000 as full and final settlement. Again 60,000. I was supposed to collect 60,000 rupees, but as a full and final settlement, I am collecting 57,000 rupees from Ashok. So let us understand what exactly will be the account which will get affected because of this transaction. So because of this transaction, the account which will get affected would be, one would be cash account, another would be discount allowed account, or you can just call it as discount account, anything is fine, and then finally Mr. Ashok's account. So from Ashok, okay, or let's first classify this. So cash, you know that this would be real account. Discount allowed, it is an expense or loss for us, so this would be nominal account, and this would be personal account. So from this particular person, Mr. Ashok, we were supposed to receive how much? We were supposed to receive 60,000. How much was the cash which was actually received? It was just 57,000, and 3,000 rupees was discount which was allowed. Okay, so 3,000 rupees of discount was allowed. Now let us pass the journal entry for this. What would be the journal entry for this? Let us apply the rule. So cash, is it coming into the business or is it going out? The rule of real account states debit what comes in, credit what goes out. When I am receiving this 57,000 rupees from Ashok, is the cash coming in or is it going out? So don't you think the cash is coming in, therefore we'll be debiting this. Discount allowed, again the rule of nominal account. Okay, so debit all expenses and losses, credit all income and gain. The place wherein I was supposed to receive 60,000, I am receiving only 57,000. It means 3,000 rupees I am receiving less. So this discount which I am allowing is loss for us, therefore we'll be debiting it. Clear? So debit all expenses and losses. Now let's talk about the rule of personal account. Debit the receiver of benefit, credit the giver of benefit. Now when I'm receiving this cash from Ashok, is he receiving the benefit or is he giving the benefit? He is giving the benefit, right? Correct. Therefore we just need to credit his account. Debit the receiver, credit the giver. In this case, Ashok is giving us the benefit of the amount. Okay, so therefore we'll be crediting his account. So look at the journal entry. The journal entry would be like this. Cash account debit 57,000. Discount allowed account debit, or you can just call it as discount account debit. How much is the discount? 3,000 rupees is the discount. It is a loss for us. Okay, so therefore we'll be debiting this. To what? To Ashok's account. So Ashok's account to the extent of 60,000. So this would be the journal entry for credit sales, cash received, and when only some portion of cash is received and balance is allowed as discount. Again, what type of entry is this? We have got more than one debit. So this would also be treated as compound entry. Is this clear? What is compound entry? Any journal entry which has got either more than one debit or more than one credit will be treated as compound entry. So far with respect to these 10 transactions, is there any doubt? Anybody having any doubt or any question? Clear? Okay. So now that we have covered basic entries, okay, so look at this. What and all transaction did we look for? So we looked for these transactions. What was first transaction? First transaction was commencement of business, okay, by contributing only cash. Second transaction, commencement of business by contributing cash and asset. Remember, Mr. A started the business with cash of 5 lakh and 2 lakh rupees of furniture. Okay, that was the second transaction. So third transaction and fourth transaction was with respect to purchases. Okay, so purchase and sales. Okay, that is cash purchases and cash sales. Clear? So after this, the fifth transaction was pertaining to credit purchases. So what will happen if I am purchasing the goods on credit? The sixth transaction was with respect to settlement. Settlement without discount. Seventh transaction was settlement with discount. Clear? And then the eighth transaction was with respect to credit sales. Okay, so the next thing is settlement without discount. Okay, that is from the customers when I am collecting the cash without allowing any discount. And then the 10th transaction was settlement with discount. Okay, so these are the 10 transactions which we have discussed so far. Okay, so let's have a look at the next transaction. Purchase of furniture 1 lakh. This is the next transaction. Okay, so here the entry would be like this. The two account which will get affected, okay, by this particular transaction would be what? Majority of the student would go wrong over here. Just because they see this particular term purchases, they would say that the two account which are getting affected are purchases and cash. No, you are supposed to use the term purchases and sales only if it is goods. Whenever you are purchasing or selling a fixed asset, okay, you are not supposed to use the term purchases or sales. Clear? So remember this point carefully. Okay, so whenever you are dealing in goods, whenever you are either purchasing the goods or whenever you are either selling the goods, only in these two situations or circumstances you are supposed to use the term purchases or sales. Okay, whenever you purchase any fixed asset, don't use the term purchases because it's not goods for you. Okay, you will have to give effect to the concerned fixed asset. Here, don't you think the furniture which I'm purchasing is a fixed asset for me? Can I use the term purchases? No, I'm not supposed to use the term purchases over here. The account which will get affected over here would be furniture account and then cash account. So what will be the entry for this? Or let us just classify whether it is personal, real or nominal. Furniture, for that matter, this is real account. It is an asset, therefore real account. What about cash? Even cash is real account. So all we need to do is just apply the rule of real account. The rule of real account says debit what comes in, credit what goes out. When I'm purchasing the furniture, what do you think the furniture, is it coming into the business or is it going out? It is coming into the business, therefore we just need to debit it. What about the cash? Don't you think the cash will be going out of the business? Therefore we just need to credit this cash. Debit what comes in, furniture is coming in, I'm debiting. Credit what goes out, the cash is going out of the business, therefore we'll be crediting it. So the ultimate journal entry would be like this: furniture account debit, to cash account. This would be the journal entry. Is this clear? Suppose I purchase these furniture on credit basis. Okay, let's say furniture purchased from Suresh. Okay, 1 lakh. What will be the entry? Furniture account as usual will be debiting. Instead of crediting the cash account, will be crediting what? Will be crediting the Suresh account. Credit the giver. Okay, so in case of credit purchase of furniture or any asset for that matter, the entry will be what? Furniture or concerned asset account debit to creditor. Here the creditor is nothing but Suresh. Simple. Okay, so note, in case of purchase or sale of fixed asset, the word purchases or sales should not be used. Whenever I purchase or sell the goods, I am not supposed to use the term purchases or sales. Rather, I need to be giving effect to the concerned fixed asset. Remember this point. Okay. Okay, let's have a look at the next transaction. So far we are done with how many? Yeah, 11 transaction. Let's have a look at this 12th transaction. Salary paid 20,000. So what would be the two account which will get affected because of this transaction? So because of this transaction, the two account which will get affected would be salary account and cash account. Okay. So these are the two account which will get affected. One is salary account, another thing is cash account. Let us classify whether they are personal, real or nominal. What about salary account? Look from the point of view of the business. Is it an income or is it an expense? The salary which the company is paying to its employees, don't you think it is an expense? So this would be classified as nominal account. And cash, as usual, you guys know that this is real account. Okay. Now let us apply the rule of nominal account. What is the rule of nominal account? States debit all expenses and losses, credit all income and gain. So this particular salary which the company is paying to its employees, don't you think it's an expense for the business? Correct? So we just need to debit it. Okay, so debit all expenses and losses. And what about the rule of real account? Debit what comes in, credit what goes out. when I pay the salary, okay, I'm paying this 20,000 rupees of salary, is the cash coming into the business or is it going out? Don't you think the cash is going out of the business? Therefore, we'll be crediting this cash. Okay, credit what goes out. We just need to credit this particular cash. The journal entry would be like this: salary account debit 20,000 to cash account. This would be the journal entry. Is this clear? So this is how the journal entry would appear. Okay, so salary account debit to cash account. Anybody having any doubt, any confusion? Same way any other expenses for that matter. If I pay the rent, okay, what would be the entry? Rent account debit to cash account. If I'm paying the amount towards printing and stationery expenses, printing and stationery expenses account debit to cash account. Is this clear? Any expenses which you are incurring and making the payment, the entry will be concerned expense will be debited and cash or bank account will be credited. Simple. So this is pertaining to expense. Now same way, let's learn the journal entry pertaining to an income. Okay, so let's say interest received, let's say 500. So what are the two accounts which will get affected because of this transaction? The two accounts which will get affected would be, one would be interest account, another thing would be cash account. I am receiving this interest of 500 rupees. So the two accounts which will get affected would be interest account and cash account. So this interest which I am receiving, so is it personal account, real account or nominal account? Don't you think this is an income for us? The interest whatever I am collecting or receiving, that would be income for us. Okay, so this would be classified under nominal account, which is again our income. So cash we already know. Okay, so cash is real in nature. When I am receiving this interest, okay, so this cash you already know, this is real account. Yeah. So what is the rule of real account? Debit what comes in, credit what goes out. When I am receiving the interest, don't you think the cash is coming into the business? This is my income. Okay, so credit all income and gain. So the journal entry would be what? The journal entry would be like this: cash account debit 500 to interest account 500. This would be the entry. Cash, why am I debiting this cash? Because the cash is coming into the business. Look at the rule of real account. Debit what comes in, credit what goes out. The cash is coming into the business, therefore we just need to debit it. This interest is the income for us. Credit all income and gain. Okay, according to the rule of nominal account, credit all income and gain, therefore we'll be crediting this interest account. Simple. Yes, anybody having any doubt, any confusion so far? I hope everybody understood this. Okay, so fine, let's just move on to the next transaction. Hope these journal entries are clear to everyone. Okay, so clear about these transactions. So here we learned about an expense. Okay, any other expense for that matter, whenever we are paying it, the concerned expense will be debiting and cash or bank account will be crediting. So same way, whenever we are receiving any income, the concerned income will be crediting, cash or bank account will just be debiting. Okay. Okay, so on that note, let's just look into the little advanced journal entries. All these are your basic journal entries. Okay, so let's look into the advanced transactions. So these would be little advanced transaction. Let us understand what exactly will be the journal entry. It's all about remembering the rules, guys. If you guys are clear about the rules, clear about classification, whether this account is personal, real or nominal, that is more than sufficient. Let's talk about this. So let us say depreciation on plant and machinery, or let's say on furniture, 20,000. First thing is, what is the meaning of this particular term depreciation? What is depreciation? Decrease in the value of fixed asset due to wear and tear, obsolescence, efflux of time. All these things would be treated as depreciation. Basically, as and when I keep on using the value, or as and when I keep on using the fixed asset, the value of these fixed asset reduces. Okay, so such reduction is what is called as depreciation. Clear? So decrease in the value of fixed asset, okay, so is what is called as depreciation. Now when I say, okay, I use the fixed asset for a period of 1 year, the depreciation is 20,000. Am I supposed to pay this 20,000 rupees to somebody? No, right? I'm not supposed to pay this 20,000 rupees to somebody. Depreciation is always a non-cash expenses. Always remember this, depreciation is a non-cash expenses. So it's not mandatory that all the transactions should be comprising cash component in it. No, not relevant. Look at this transaction for that matter. When I say depreciation on furniture is 20,000, the two account which will get affected because of this particular transaction would be, one would be depreciation account, another thing would be the fixed asset. So what is the fixed asset in this case? Here the fixed asset is furniture account. Clear? Now depreciation, I said that it is a non-cash expenses. Okay, so when I say expenses, it is clearly understood that this should be classified as nominal account. Okay, it is not a personal account nor it is a real account, it is a nominal account. Depreciation is a nominal account. What about furniture? This is an asset, right? So this would be treated as real account. Now you need to decide which is the account which you need to debit and which is the account which you need to be crediting. Depreciation is a non-cash expenses. Okay, so according to the rule of nominal, debit all expenses and losses, credit all income and gain. Okay, so I'll just be debiting this particular depreciation account. Why? Because it is a non-cash expense. Okay, reduction in the value of my fixed asset is loss for me. Therefore, I'll be debiting it. What about furniture? It is a real account. Okay, so the value of furniture is going out. Debit what comes in, credit what goes out. Okay, so although the physical furniture is not going out of the business, the value is what is getting reduced, right? Okay, earlier the furniture, let's say it was 2 lakh. From this 2 lakh, 20,000 rupees is getting reduced. Okay, so furniture to the extent of 20,000 rupees is going out. Okay, so therefore we'll be crediting this. Is this clear? So what would be the journal entry? The journal entry would be like this: depreciation account debit, to furniture account. Is this clear? Okay, let's talk about the next transaction. Let's say bad debts 800. What is bad debts? First thing is understand the meaning of this particular term. What is bad debts? The amount which we cannot recover from our customers, that is what is called as bad debts. Okay, in spite of continuous reminder, the customer is not paying me the amount. So that becomes bad debts. So what about this bad debts? Is it a gain for you or is it a loss for you? It is loss, right? So the two accounts which will get affected over here are, one is bad debts account. Okay, so which is loss for us. Why? Because in spite of making the sales to my customers, they're not paying this amount back. Okay, so that becomes loss for us. What would be the next account which will get affected? One is bad debts, which is loss. Clear about it. What about the other account? You were supposed to collect the amount from whom? You were supposed to collect the amount from your customers. Now your customers are not paying the amount, so the other account which will get affected would be your customers account, or you can call it as debtors account. Okay, so look at this. So this would be nominal in nature and this debtors would be personal in nature. Now understand this. Let us just apply the rule of nominal account and personal account. So what is the rule of nominal account? Debit all expenses and losses, credit all income and gain. So this bad debts is what? The amount which I'll not be able to recover from my customers. So this is loss. Therefore, we'll just be debiting it. Debit all expenses and losses. What about this rule of personal account? The rule of personal account says debit the receiver of benefit, credit the giver of benefit. So this particular person, the customer over here, He is giving me the benefit. It's not a benefit actually, it is a burden. Debit the receiver, credit the giver. Don't you think this is the person, the customer is the person who is giving me this burden of 800 rupees of bad debts? Therefore, we'll just be crediting his account. So the entry would be like this: bad debts account debit. This was 800, right? So bad debts account debit 800 to debtors account 800. This would be the entry. So this was for 20,000. That's all. These are the two accounts which will get affected: bad debts account and debtors account. Bad debts is loss for us. Nominal account, debit all expenses and losses. Therefore, I have debited this bad debts account. And what about debtors account? So it is my customer's account. Debit the receiver, credit the giver. These are the people who are giving me this burden of 800 rupees. Therefore, I'll be crediting their account. Is this clear? Clear about the depreciation entry and bad debts entry? Suppose I am recovering the bad debts. Bad debts recovered 400. Okay, now this bad debts which I am recovering 400, what does it mean? Earlier I had treated some amount as non-recoverable. Okay, I thought that this particular customer, it has already been a long time since the due date, he will not be making the payment, but all of a sudden he was enlightened and he is now paying this 400 rupees. So whatever bad debts which we have already written off, okay, now we are able to recover it. Okay, so we'll be calling it as bad debts recovered. So what are the account which will get affected? So one would be cash account, another would be bad debts recovered account. Why is this cash account coming into picture? Because when I say bad debts recovered, the customer are literally paying me the amount. Okay, I'll be receiving this particular cash. So this would be real account. Okay, what about bad debts recovered? Bad debts is loss for you, whereas bad debts recovered would be gain for you. Look at this. This bad debts was loss for you, therefore you debited. Whereas this bad debts recovered, it is gain. Whether it is loss or gain, both will be forming part of your nominal account only. Only thing is, this is gain, therefore I'll be crediting it. Whereas this cash account, it is real account. Okay, so debit what comes in. Okay, so debit the cash account and credit the bad debts recovered account. So what would be the entry? The entry would be like this: cash account debit, to bad debts recovered account 400. This would be the entry. Clear? So in the previous case, I did not give effect to cash. Why? Because I am not recovering the amount. Okay, so whatever amount of goods, whatever I have sold to the customers, I am not able to recover it. That's why cash is not forming part. Whereas here, I am recovering the cash. Whatever amount I treated as bad debts earlier, now I am able to recover it. So when I say I am able to recover it, I am literally receiving the cash. See guys, you should be able to differentiate when exactly is that you need to be giving effect to cash and when exactly cash should not be forming part of your journal entry. Depreciation for that matter, it is a non-cash expenses, therefore we did not give effect to cash. When I say this bad debts, okay, so there also the amount I am not able to recover from the customers, therefore you need not give any effect to cash account or bank account. When I say bad debts recovered, okay, what does it mean? Understand the transaction. Those amount which I treated as bad debts, now I am able to recover it. Okay, it means some cash I am receiving it. Therefore, I am giving effect to cash over here. Clear? So, majority of the student would do this mistake. They'll think that every transaction it should be having cash component in it. Not required, guys. There are few non-cash transaction also. Suppose the next transaction for that matter. Let me show you the next transaction. Outstanding rent. Okay, or let's say outstanding salary 3,000. I have incurred the salary expenses but I haven't paid it yet. Okay, so salary expenses incurred but not paid yet. So if you remember the accrual concept, we need to recognize the transaction, or we need to record the transaction as and when the transaction takes place, irrespective of the fact whether money has been received or not, or whether money is being paid or not. So in this case, when I say outstanding salary, I have incurred the salary expenses to the extent of 3,000. Only thing is, I have not paid the amount yet. Okay, so what would be the two account which will get affected over here? I need to recognize this as an expense. So salary will be recognized as an expense for that particular year itself. So salary account, and what? Cash. Do you think cash will be forming part of this entry? No. When I say outstanding salary, what does it mean? The salary is not being paid yet. Although I have incurred the salary, am I paying it yet? No. If I would have paid it, why would it be called as outstanding? Are you getting my point? Correct? So it is still pending. That's why it is treated as outstanding. It means I have not paid it yet. So cash will not be forming part of this transaction. The other account would be what? The other account would be outstanding salary account. Clear? So what is salary? It is nominal in nature. Okay, it is an expense for the business organization, therefore it is nominal. What about outstanding salary? Is it personal, real, or nominal? Don't you think this is personal account? To be more precise, this would be representative personal account. If you just go back and check this particular personal account, look at this. Look at this. Representative personal account, any outstanding expenses and prepaid expenses will be forming part of your representative personal account. Clear? Okay, let us just apply the rule of the nominal account and personal account. So rule of nominal you already know, debit all expenses and losses, credit all income and gain. So the salary is an expense for us, therefore we'll be debiting it. Okay, it is an expense for us, therefore we'll be debiting. Outstanding salary, which is personal account. Okay, what is the rule of personal account? Debit the receiver of benefit, credit the giver of benefit. So this outstanding salary, don't you think it represents the employees, okay, who have not received the salary yet? Are they the receiver of benefit or are they the giver of benefit? They are the giver of benefit. They are telling the company, it's okay, if you have not paid the salary, you can pay it after 5 days. Okay, so they are giving extra 5 days of time for the company to settle the amount. Credit the giver, they are the creditor. Okay, so they are giving the benefit over here, therefore you will be crediting their account. So what would be the journal entry? The journal entry would be like this: salary account debit, to outstanding salary account. Salary account debit to outstanding salary account. This would be the entry. Is this clear? Anybody having any doubt, any confusion so far? Hope you all understood this. Now subsequently, after few days, okay, so in this example, let's say after 5 days, the salary is being paid to the employees. Let us understand what will be the journal entry in that case. Outstanding salary paid. So this pending 3,000 rupees of outstanding salary, when I am literally paying it to the employees, what would be the entry? Here tell me cash is involved or not. I am paying this pending salary. When I say that I am paying it, don't you think cash is involved over here? So here the two accounts which will get affected would be outstanding salary and cash account. So cash, you already know that this is real account, and outstanding salary, you already know that this is personal account. So when I pay this particular 3,000 rupees, going forward there won't be anything called as outstanding. Okay, so let's just apply the rule. So cash, it is real account. Debit what comes in, credit what goes out. When I pay the cash, don't you think the cash is going out of the business? Therefore I just need to credit it. So what about outstanding salary? It is personal account. The rule of personal account says debit the receiver, credit the giver. So outstanding salary over here, it would be representing the employee's account, okay, to whom I am paying the salary now. Earlier they gave us the benefit, okay, so credit the giver of benefit. Now when the company is paying this 3,000, don't you think they will be receiving the benefit? So I will be debiting this outstanding salary. So the entry would be like this. So outstanding salary account debit 3,000 to what? To cash account. So here cash is forming part of the entry. Why? Because the pending salary whatever was available, I am just paying it now. Did you understand this? Clear? Okay, let's move on to the next transaction. Let's say prepaid insurance rupees 2000. I'm paying the insurance premium in advance. Okay, so prepaid insurance to the extent of 2000. So what will be the account which is getting affected? Tell me whether cash is involved in this transaction or not. Prepaid insurance. I'm paying the insurance in advance. Insurance premium relating to next year is being paid in the current year itself. Yes? What do you think? Is the cash involved or not? Don't you think the cash is involved because I'm paying something in advance, right? So the two accounts which will get affected over here are, one is cash account, another thing is prepaid insurance account. Clear? So cash, you already know that this is real account. Any prepaid, any outstanding expenses are always personal account. So this would be personal account. Okay. Now we just need to apply the respective rules, okay, and then arrive at the journal entry. So what's the rule of real account? Debit what comes in, credit what goes out. When I'm paying the insurance premium in advance, is the cash coming in or is it going out? The cash is going out, therefore you will be crediting this cash. Okay, and what about this prepaid insurance? What does this represent? Don't you think this represents the company to whom I'm paying the insurance premium in advance? Correct? So this will be representing the company to whom I'm paying this particular premium in advance. Okay. So tell me whether the company, is it receiving the benefit or is it giving the benefit? I'm paying the premium to the company. Don't you think the company is receiving the benefit? Debit the receiver of benefit. So what will be the journal entry for this? Prepaid insurance premium account debit to cash account. Okay, so prepaid insurance 2000 to cash account 2000. This would be the journal entry. Is this clear? I hope this entry is clear to everyone. Anybody having any doubt, any confusion so far? Understood this part, right? Clear? Okay. Now, let's just look into another entry. Okay, so let's just look into the next entry. Cash deposit 20,000. Okay, so I'm depositing cash into the bank account to the extent of 20,000. Let us understand what exactly will be the entry for this. So the two accounts which will get affected over here would be, one would be cash account, another would be bank account. Cash, you already know that this is real account, and bank would be what? This would be personal account. Always remember, bank, although it is an asset, it is not considered as real account, it is considered as personal account. Okay, it is somebody's bank account, XYZ Limited's bank account, Mr. Manoj's bank account, Suresh bank account, Ramesh bank account. Okay, so it is somebody's bank account, that's why it is personal account. Now the rule of real account, whenever you pass the journal entry, don't you think you need to look from the perspective of the business? So for the business, tell me whether the cash is coming in or is it going out. When I'm depositing the cash, don't you think I'm literally taking the cash and giving it to the banker? The cash is going out of the business. Okay, so therefore you need to credit the cash account. Credit what goes out. Okay, and what's the rule of personal account? Debit the receiver of benefit, credit the giver of benefit. When I'm depositing the cash into the bank account, don't you think the bank is receiving the benefit? Therefore, you will be debiting this bank account. So the entry for cash deposit would be what? Bank account debit 20,000 to cash account 20,000. This would be the entry. Okay, so bank account debit to cash account 20,000, 20,000. This would be the entry. Now, same way, if at all I am withdrawing the cash, exactly opposite entry. Okay, so cash withdrawn. Let's say 5,000. If I am withdrawing the cash, let us understand what exactly will be the journal entry. Okay, so again the two accounts which will get affected would be the same, cash account and bank account. Now look at this. I withdraw the cash from the ATM. Is the cash coming into the business or is it going out? Here the cash is coming into the business, therefore will be debiting the cash. Okay, and bank, don't you think it is the giver of benefit? credit the giver of benefit. Okay, so I'll be crediting the bank account. So what would be the journal entry? The journal entry would be like this: cash account debit 5,000 to bank account 5,000. Clear? Okay, let's have a look at the next transaction. Transfer of 3,000 from SBI to HDFC Bank. Now I've got two bank accounts. It's not mandatory that one business entity should be having only one bank account. Now look at this. I've got two bank accounts. Okay, so one is SBI, another thing is HDFC Bank. Now what I'm doing in this case is, see both these accounts, okay, don't you think both will be treated as bank account, which would be personal account in nature? Personal and personal, both are personal account in nature. Now how much money am I transferring? I am transferring 3,000 rupees from SBI to HDFC. SBI to HDFC, 3,000 rupees is being transferred. So the rule of personal account is debit the receiver, credit the giver. Which is the bank which is receiving this 3,000 and which is the bank which is paying this 3,000? Don't you think this is the bank which is receiving? When I'm transferring from SBI to HDFC, HDFC is the one which will be receiving. So debit the receiver, you will be debiting this HDFC bank, and which is the bank which is paying? Credit the giver of benefit. SBI is the one which is giving the benefit, therefore you will be crediting it. So here the two accounts which are relevant would be SBI bank account So both would be considered as personal account in this case. Okay, so you know the rule of personal account: debit the receiver of benefit, credit the giver of benefit. When I am transferring the funds from SBI to HDFC, HDFC is the one which is receiving the benefit. I'll be debiting HDFC bank, and this SBI bank is the one which is giving the benefit. Therefore, I'll be crediting this SBI bank. Okay, so the account which will be debited would be HDFC, and the account which will be credited would be SBI. So the journal entry will be what? The journal entry would be HDFC bank account debit 3,000 to SBI bank account. This would be the entry. Okay, so these entries, okay, so these three transactions, if you guys observe carefully, whether it is deposit of cash, whether it is withdrawal of the cash, or whether it is interbank money transfer, these three transactions would be treated as what? They will be treated as contra entries. So remember compound entries. What are compound entries? Those journal entries wherein either more than one account will be debited or more than one account will be credited. Such entries we call it as compound entry. What are contra entries? Contra entries, okay, so it refers to those entries which comprises of only cash and bank account. So those journal entry which comprises of only cash and bank account will be treated as what? It would be treated as contra entries. So here if you guys observe, only bank account is debited and credited. Here look at this, only cash and bank account is involved. Here also if you see, only cash and bank account is involved. So those journal entry which consist of only cash and bank, okay, will be treated as contra entry. So contra entry will mainly be comprising of three things. Okay, so contra entries mainly comprises of three things. One is deposit of cash, another thing is withdrawal, and last thing is interbank transfer. So deposit of money, withdrawal of money, and interbank money transfer. Remember the third transaction, money transferred from SBI to HDFC. So these things will be treated as what? Contra entries. What are contra entries? Those entries which comprises of only cash component and bank component. Okay, so whenever in the journal entry, if you come across only cash and bank component, it would be treated as contra entries. I hope you all understood this. Any doubt, any confusion so far? Clear? Okay, so we'll stop over here. Okay, so few more journal entries is what is left over, which we'll be discussing it in the next class. So by the time, okay, we start with the next class, I want you guys to go through these journal entries. Okay, try to recall. Okay, so try to make sure that you guys remember all these journal entries. Clear? So in the next class, we'll be dealing with little more advanced journal entries, and after that, we'll be talking about another approach through which you can pass the journal entry, that is American approach or modern approach. Okay, so the next approach is what we'll be learning in the next class. Okay, so make sure that you guys go through these concepts. Okay, so whatever we have discussed in today's class, make sure that you guys go through it. Okay, so especially the golden rules and these transactions. Okay, with logic, I have explained you how exactly do we pass the journal entry. Okay, so kindly go through it. Thank you so much, guys.